Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Thanks so much for joining me in today's video where we're going to be talking about Bitcoin's price action through the lens of weekly Bollinger Bands. And these are really interesting indicators, levels that outline to us when Bitcoin has overextended itself towards the upside. For instance, in these periods, this top Bollinger Band being a resistance effectively. But whenever we see deviation beyond this resistance, we see rejections follow suit shortly thereafter, and it doesn't really necessarily mean we're going to be entering a bear trend when those deviations beyond that resistance occur. It just means that we're going to see price deviate back into the Bollinger Band. But of course, aside from these deviations, we tend to also see picture perfect rejections like over here, and even over here, though some overextension in the upside wicks. So this top Bollinger Band is a very valuable resistance point, a point of rejection for price. And extending that same logic, we also can see some strong buy side reaction from the bottom Bollinger Band, which figures as a support. And you can see that this has been a fantastic area of historical support right over here in the Bollinger Band, in this downside wicking towards the Bollinger Band, where we actually get a picture perfect rejection, or at least a picture perfect buy up from the support of this Bollinger Band. And going back to January 6th, I was talking about a potential rebound from the lower Bollinger Band support. And we're going to be talking about this support rebound going forward in this video. That was a lengthy introduction of the Bollinger Bands and why I like to use them. So we're going to be dissecting what that Bollinger Band says, this lower Bollinger Band, what does it say in terms of the macro picture? And going forward, what has this recent recovery in Bitcoin's price action, what could this mean through the lens of those Bollinger Bands going forward? In any case, let's dive right into the video after our quick sponsor. Our sponsor for today's episode is Ledn.io. Ledn offers a wide variety of financial services for long-term holders of digital assets. Ledn helps you do more with your Bitcoin through their Bitcoin savings accounts, their Bitcoin-backed loan program, and their B2X program. Their Bitcoin savings accounts let you earn 9.25% on your USDC and 6.25% on your Bitcoin. With their Bitcoin-backed loan program, you can take out a stablecoin or dollar loan off of your Bitcoin, which is a much more tax efficient way to keep your Bitcoin exposure while gaining dollar liquidity. And through Ledn's B2X program, you can double your exposure to the Bitcoin you already own. Check out the link below in the description and do more with your Bitcoin today. Awesome. So this is why I was talking about early January, and going forward, late January, here we actually saw the Bollinger Band gain some sort of traction, some price strength confirmation, just like we saw in July 2021. And as we fast forward into February 4th, we see some great reaction, and fast forward to today, we've seen a full-blown reversal, though not on the macro scale of the July reversal, but we are seeing some really positive signs in terms of the Bollinger Band reversal here. And you can see that the bottom of the Bollinger Band figured as a support once again, only difference being that, of course, downside wicks into that lower Bollinger Band were quite effective. Here we saw a more volatile, more strong reaction from that Bollinger Band support. Here we saw a more sustained reaction. So you're not seeing that the buy side pressure is as volatile and as fervent emotionally as when we were looking at these downside wicks, but nonetheless a nice reaction, a good reaction so far. And the Bollinger Bands, if we just focus on them very simplistically, this being the resistance, this being the support, and this being the macro range in of itself that we've been talking about in yesterday's video, you can see how the Bollinger Bands paint a nice picture that coincides with the macro reaccumulation range that Bitcoin is currently accumulating and consolidating within. So you can see a great reaction from the macro range low, which is approximately confluent with the lower Bollinger Band. And you can see here that the macro range high is confluent with the upper Bollinger Band. So that's an interesting picture to bear in mind. These Bollinger Bands can be great points of reference going forward, but what I want to talk about also is that this mid-range right over here of the reaccumulation range is suggesting to us that the blue exponential moving average, that is the 50-week exponential moving average, coupled together with the 21-week exponential moving average that we've been talking about in yesterday's video, those two EMAs signify and constitute the mid-range of this reaccumulation range. But what the Bollinger Bands are actually suggesting is that the midpoint of their range, of the range formed by the Bollinger Bands right over here, the midpoint as denoted by the 20 MA, the simple moving average, this is suggesting to us that this is the midpoint of the Bollinger Bands, and that 50,000, 52,000 should be that resistance area for price action. So if we focus on this mid-range in the macro reaccumulation range, this is essentially telling to us that Bitcoin is currently in the lower half of this macro reaccumulation range. But once we break back above it and reclaim those two key EMAs that I've been talking about in yesterday's video as a support, then we're probably going to see a nice rally towards the 50-52 area, which is the next resistance for the Bollinger Band midpoint. And what's interesting about that is that this Bollinger Band midpoint is approximately confluent with the 21-week exponential moving average, which is a key bull market indicator. And if you saw yesterday's video, you'll see that this essentially is mimicking the 21-week bull market EMA, and the bull market EMA was retested here and here as well. And effectively, this 20 MA, the midpoint of the Bollinger Band, is essentially the same thing as the 21-week exponential moving average, right? That makes sense. The 20 moving average and the 21-week exponential moving average, very similar moving averages indeed. So this Bollinger Band is a very good indicator for just outlining those levels for us, the range high, the midpoint, and the range low. And this Bollinger Band reversal could be culminating at the midpoint of this Bollinger Band range, essentially speaking, but it has to turn into a support. So we need to see essentially this sort of price action relative to that MA, the midpoint of the Bollinger Bands. We need to see that be a successful retest in order to see a rally towards the top of the Bollinger Bands once again. So far so good on this reversal, but at the moment we're just occupying the bottom half of the Bollinger Bands after a great reversal from the lower Bollinger Band. But what we want to see is a retest of this midpoint as a support to see further upside into the upper half of the Bollinger Bands, because ultimately the Bollinger Bands are confluent with the macro reaccumulation range, and we want to see price strength confirmation at the midpoint because that's going to guarantee further upside. If we can't flip this mid-range into a support, we're going to see further consolidation at the lower range, at the lower half of the macro reaccumulation range. In any case, that's about it for today's video. Thanks so much for watching today. I hope you enjoyed this one. Leave a like if you did, of course, and subscribe to the channel if you haven't yet. I'm Rekt Capital. Thanks so much for watching today, and I'll speak to you in the next one. Speak to you soon.